Hello, my name is Jingo Nelly, and today we are going to be looking at another tutorial. But before I begin off, make sure you subscribe to the channel. It will bring you some good luck in your forthcoming exams.
Now, topic 4, in the topic 3, you talked about audit planning and risk assessment. Now, one of the things you looked at was understanding the entity and the environment, which is very important. Is about 6. I think it is the last. It was listed last. So there are many things you have to understand: the financial performance, the business environment, accounting policies, management structure, and then internal control. So we are still, this is a continuation of topic 3, planning and risk assessment, except it is handled separately because it's a little bit more detailed. And here we are going to look at, basically, you remember the audit risk model where we talked about the inherent risk, control risk, and detection risk. So in that model, we are working on inherent control risk. So basically, control risk, we are assessing control risk by looking at internal control. But also in this topic, we shall be looking at tests of controls, which were introduced in topic 3. So basically, we are assessing control risk, in order to determine the audit approach, which was introduced in topic 3. Now, the first part we are going to look at today is an introduction of this topic, and it's about 10 pages. I'm going to give you the notes, which we are using here. These notes, for repeaters, please, these notes have been revised. So you are advised to have the current notes, and I'm going to put them on a MoveSep. Now, number 1, importance and components of internal control. What is internal control? Now, internal control, we are still on ISA 315, which we looked at in topic 3. Internal control, the ISA 315 defines internal control as a process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of the entity's objectives with regard to effectiveness and efficiency of operations, reliability of financial reporting, compliance with applicable laws and regulations. In other words, internal control is a system put in place by directors and management and other personnel in the company, in the entity, to provide reasonable assurance that to enable the company achieve its objectives. Of course, the objectives cannot be achieved 100%. The objective, that's why we are using the word reasonable assurance, which was introduced in topic 1. So a good internal control system ensures that the business objectives, ensures that the operations are carried out efficiently and effectively. Efficiency is minimizing costs, increasing output at minimal costs, and the effectiveness is achieving the set objectives. As we saw this term in topic 1. Now, reliability of financial reporting. A good internal control ensures we produce reliable financial statements and ensures that the entity complies with relevant laws and application. Please, somebody making noise, you are disturbing us. Oh, can we proceed? So, controls mitigate risks. In other words, why do we talk about controls? I can take a simple example. In the university, students want to cheat in exam. So what do we do? That's a risk. How do we mitigate that risk? We mitigate that risk by, for example, checking people before they enter the lecture rooms, invigilating, etc. To achieve the objective of ensuring that there is no cheating. So we have to identify what is the objective. The objective will lead us to a control. Now, internal control systems include the accounting system. So internal control is bigger than accounting. We are just looking at the whole entity. Systems is the whole entity, and there are many, including the accounting system. But of course, we know, since we are auditing financial statements, we tend to focus on what affects the accounting system and what affects the accounting system. Now, understanding internal control helps the auditor to identify controls that may prevent risks or material misstatements in financial statements. All whatever we are doing is assessing risks. Now, understanding the system enables the auditor to determine the audit approach. Now, please. What's happening? What is happening? Hello? Please, somebody who is near noise. Okay, thank you. Now, if adequate controls are in place, you remember in topic 3, we talked about 2 types of tests. Tests of controls, tests of controls and substantive procedures. So if there are adequate controls, we have to decide whether we should perform the controls. In other words, we perform the test of controls if they are good controls to test. Otherwise, if there are no good controls, we perform more substantive procedures. Now, of course, we have to look at controls in affecting various financial statement areas. For example, we shall look at controls affecting sales, controls regarding purchases, etc. Now, where we identify weaknesses, which we call deficiencies, these are communicated to management. Now, what controls are we looking at? Components of internal control, there are basically 5. Now, in any system, we have 5. Any system is made up of 5 elements. On the top, we have control environment. Then, in an entity, there is control environment is the top level. Let's say the board. Yeah. Then, any system has risk assessment, because managing an entity means managing risks. And then to manage these risks, we put in place control activities. And then we have to put in place an information system to run the business. And then we have to monitor the controls. So those are the 5 elements which are in ISA 315. Now, briefly, we have 2 hours to finish this and 30 minutes already gone. What is a control environment? Now, a control environment includes governance and management functions and attitudes, awareness, and actions of those charged with governance and management concerning the entity's internal control, and it's important to the entity. So with the control environment, we are looking at the top level controls. And you see, as the English say, that a fish rots from the top. So here we are looking at how is the top of the company. We are looking at the board and top managers, because these form the foundation of the other 4 elements. If the top wants a successful company, the company is likely to be successful. Of course, there are issues, environmental issues like COVID, but if those are relevant, then the company, the top will lead the company to success. So in this is with the top we are looking at, and that's why we are starting with the control environment. And this control environment basically includes the following issues. How does the company communicate and enforce integrity and ethical values? In other words, does the MD create and maintain an honest and ethical culture? Of course, this one should be the board and top management. Do they maintain an honest and ethical culture and lead by example? If you say don't steal, then you are the manager, the CEO, you should not be stealing. And so, are they honest? And do they communicate the entity's ethical and behavior standards to employees through a code of conduct? You know, companies have a code of conduct, entities have a code of conduct, including MOBs. That code of conduct, you know what it does? It governs how people's behavior. Yeah. And basically, the key area here is doing good. Because if you do good to the company is likely to be successful. So that is the first aspect. Number 2, commitment to competence. I'm using the word company for anything, please. So company can put the mosque, the church. Does the entity recruit competent staff with the required knowledge and skills? Of course, you know, when they are recruiting, there are times you go through three interviews, because it is the competent staff to carry out the entity activities. What about the participation of those charged with governance, the board? How effective is the board? Is it independent of management? And do the members have appropriate experience? I think you did this one in corporate governance in topic 3. And do they provide effective oversight over management? Are they actually in charge of the company, or they simply meet for allowances? Yeah. When they meet, they scrutinize management activities and guide management. That was covered under corporate governance. Number 4, management style. Management philosophy and operating style. What is this one? Dosing. Now, Banang, is anyone dosing with me? Please dose alone. Why should people dose with you? Don't make funny comments. You are disturbing my students. If you want to dose alone. Management's philosophy and operating style. Attitude to business risks. Do they assess risk For example, do they carry out feasibility studies before they carry out anything? Yeah, or they undertake anything for the sake. Do they use suitable financial reporting policies? And do they value internal control? You see, remember one time there was a bank. I think it was okay. Then one bank, the every bank, as we said in top one, is supposed to have internal audit. Now the issue was the MD was told you must put in place, establish internal audit. The MD said we don't need internal auditors because we have good managers. That was a whole MD of a bank. No wonder the bank collapsed, and even the MD is already is no longer alive. For the collapse of the bank, I think partially led to his death. Yeah, that I had that statement. Now you can see attitude towards sound internal control. Of course, the MD didn't want internal audit in order to audit the loans they were giving to themselves. And no wonder the bank collapsed because of insider lending. Yeah. So that's what, and then structure. What structure do we have? The auditor has to look at the structure. Is it suitable in achieving the entity's objectives? Does it facilitate accurate and timely communication? And yeah, does it improve decision making? So here we have, I think you are doing strategic management, or you did it, a flat structure and a hierarchical structure, which is better. Flat structure leads to quick and accurate decision making compared to the hierarchical structure, which is bureaucratic. Now, here we are looking at, the auditor has to look at the structure. Those are one of some of the things you have to put, you remember, on the permanent audit file. You look at the structure from the top up to the last person. How many layers do we have? The structure should be, you remember the structure of an audit firm. We have the partners, we have the managers, we have the supervisors, and we have the associates. Only 4 levels. Yeah, that is a flat structure. So from the partner, a decision can quickly reach, communication can quickly reach the associate, or from the associate upwards. Normally it is the other way around. So that is the flat structure. But if we have a bureaucratic structure like in a government where you have so many layers, that one delays decision making. Now, assignment of authority. Do we have schedules of duties? Do people know what they are supposed to do? And job descriptions. Yeah. And then human resource policies regarding recruitment, training, performance evaluation, compensation, promotion, and punishment. So all this is what constitutes. Please minimize comments unless the chatting should be, unless you are asking the questions to me. Please don't post anything. Don't post anything. Post something if you are asking something, if you are asking me. Yeah, because when you put, those people read them instead of following the discussion. Is that okay? Okay, now I can see that people are still logging in. I don't know what's the number is 150. Hopefully it's 150 times 2. So that is the control environment. Now, the second element of internal control is risk assessment. Now we are looking at risk assessment by the entity, not by the auditor. Now the auditor is assessing what they assess. Yeah. As we do internal control, as we assess internal control, we look at how management assesses business risks. Yeah. So the auditor looks at, should understand the entity's process for identifying business risks. They identify business risks. Yeah. Because management is identifying risks. 2, estimating the significance of these risks, which have high and low risk, which are high risk and low risk areas. 3, assessing the likelihood. Now, likelihood is these risks we are looking at the probability of these events taking place. For example, we are all interested in safeguarding our assets. Yeah, and these assets issue it out to a fake party, and the computer is gone. So the 3 aspects in big entities are handled by different, at least by different departments or different people. So segregation makes it more difficult for fraudulent transactions to be processed, as several people have to collude in the fraud. It's more difficult for errors to be processed, there is more checking by several people. So segregation of duties leads to increases internal check. What is done by A is checked by B, and what is done by A and B is checked by C. So it's more difficult. So there should be segregation of entity functions. So here we could be having functions. Those who receive orders, you have seen it in supermarkets. Those who receive orders, in the supermarket, for example, there are those, we have people in charge of inventory. You know, those different areas, shelves, have people who are stationed there to check against shoplifting. Then when we have the cashiers, the people who are the tellers, these collect money. Now, of course, we have people who buy. People who buy are not the cashiers. People who buy are not those inside the supermarket. They are different. And then we have those people who keep the records. So those are different functions. We are going to see this next week. Or steps. You remember our exams. There are people who check you before you enter. It's not the lecturers. Those are administrators. Then we have people who invigilate, is us. Then we have people who keep the scripts. It is not the lecturers. It is quality assurance. So you can see different steps are handled by different people. And that one ensures that the exams are properly handled. For example, credit approval in the sales of goods should be segregated from delivery of goods. Yeah, those who allow credit should not also serve the customers, because my OB will come, I will, even if he doesn't qualify for credit, I will give him approve the credit. Then if I have the goods, I will quickly give him the items, and there you go. We can go and share the money, because I know this money this person may never pay, he will never pay. Or I can give him the goods knowing that he will never pay, and we share the money. That's why the two in a big entity should be handled by different people. So we are starting with segregation of duties because it's a major control. Yeah. Number 2, the other control activity is authorization. everything we do should be authorized. Like overtime should be authorized by heads of departments. Yeah. You cannot do an exam unless you are registered. That is authorization. So we have to look at authorization controls. Yeah, there are many, very many. We are, let me not even do physical controls to ensure only authorized personnel have access to certain assets. Yeah, physical controls. It could be like that bulletproof glass you see in the bank. It prevents that counter. It's bulletproof. You cannot go to inside where the money is. So that's a physical control. This reduces the risk of losing records and assets. Yeah. So keeping money in safes or strong rooms ensure that the money is not stolen. That's a physical control. In the stores regarding the cash, etc. Reconciliations. Yeah, reconciliations are a control activity. What do we reconcile? We reconcile records with another source. For example, we reconcile the cash book with the banker statement. Why? Because the cash book is internal. The banker statement is from the bank. So now we have to reconcile to identify errors and fraud. Yeah. There are many reconciliations. That's just one example. So long as we reconcile information from, for example, different sources. We shall be looking at this. Let me not because delaying me. Performance reviews. Performance reviews. We compare, for example, actual expenditure against the budget. Yeah. If the money is, if you have been given, for example, last month they read the budget. That money, the money given is supposed to be for a year. So we have to, at the end of the year, we have to compare the actual expenditure against the budget. If you have been given 100 million and actual expenditure is 150 million, then it means that you have to answer questions why you have spent more and where you go, anyway, even where you got the money from. You have to get a supplementary budget. But the issue is, why did you spend 150 when your budget was had 100 million? That comparing should bring out maybe fraud in the 150, in the extra 50 million. Yeah. Comparing internal data with external sources. For example, comparing record of goods dispatched with goods received by the customer. You know, when you load items on a truck, at times you have to call the customer. I loaded 100 bags of cement. How many have you offloaded? At times, you may find the person has offloaded 90, and the driver has told him that those are the ones he got from the shop. So at times you need to cross-check. Comparing the results of physical count with accounting records. Yeah, cash counted with the cash. Now, at the end, every day before you leave, somebody has to go through the receipts, get how much money has been receipted, reconcile with the cash in the safe or the cash banked, or both. Yeah, that comparing is done. At times you don't even have to wait at the end of the day. It's done daily, the longest period. It checks, it ensures theft of the money. If you don't do it, people will receive the money and they are likely to steal it. Now, of course, controls over computerized applications like password controls for access security. Yeah, this one you did in IT. So now there are even more, that this is what the standard talks about. What is this one saying? Now, so these are the activities. So we have to get to look at these activities, control activities. There are more. but these are the major ones. So, and of course, lastly, monitoring. Yeah, you may have a good board, you have a good risk assessment system, you have a good information system, you have good control activities, but we must monitor how the entity is being run. So that's why monitoring of activities is important. The monitoring is the process to assess the effectiveness of internal control performance over time and taking necessary remedial actions to deficiencies in its controls. So we assess the system and correct the system where things have gone wrong. The system may become less effective. So management does this, but management is assisted by internal audit. Yeah, internal audit plays a key role. And at times, so why do we monitor the control? Because we need to see check whether we are still on course. So in case there are weaknesses, then we improve the system. Yeah. So this is the last element, the fifth one. I suppose there is no issue. We have spent about 40 minutes. Can we move on? Now, this is what happens regarding a small entity. Many of the businesses here are small. What is the control? What is internal control regarding small entities? When we talk about internal control, it doesn't mean that internal control in Makerere is the same in MOBS. MOBS has how many students? 10,000? Let's say 10,000. It's basically big. Is the same as let us take a small shop, buy your sugar, a canteen where there's one person selling. You cannot compare the controls in that canteen with the controls in a big shop in town. Yeah, the base control, the desks are the same, but what is on the ground is different. So the internal control systems are different. So now what we have basically seen in the last 1 hour is what should be in a big entity. Then how does the system in a small entity differ? And here we are summarizing. Number one, many controls relevant to a large entity are neither practical nor appropriate for a small entity. Yeah. Like small entities, we said, you remember we said in the topic 1, some of them don't even have accounting department. They don't need them. They don't have the money. Yeah, they don't have the money. 2, for a small entity, the most important internal control is the close involvement by the directors or proprietors, the owners. So if you have a shop, you are running a shop with your wife. So it is your involvement in the shop. It is how you manage. How involved are you in the shop together with your wife? If you are the wife helps you, so it is you now, the owner. How involved are you in that business? That is the most important control in a small entity. However, because you see the owner buys goods from the best sources, ensures all items are offloaded, things are not stolen from the shop, and then their goods are sold at the correct price, and then banks the money. So that one is a very important, he plays a key role in operating the shop. But the owner, the close involvement by management, if he's not the owner, also enables management to override controls, and if they wish to exclude transactions from records. So we are saying the close involvement of the owner or management is good, but if the owner is not, if the manager is not the owner, or the close involvement by the manager and the owner leads to overriding controls. Now, what does this mean? Overriding control is it may not be desired in that the controls are put in place to run the system successfully. But at times the owner can override control. I will just give an example. For example, in the MOOCs, students are supposed to do test 1 when they have paid some percentage of tuition. Yeah, that's a control. But some of you have problems. So what you do, you go to management, they give you permission to override that control, to do a test or an exam when you have not paid the required amount of money. That is overriding the control. So managers can do that for the sake of students not missing exams or tests, which is okay. But at times, that overriding can be done. We have to look at this aspect of overriding. At times, overriding helps ensure that things are done the right way. But at times, they can abuse the system. They can abuse their authority. I'll be talking about this one in this topic. Now, we also, if they wish to exclude, they can leave out certain managers can ensure that certain transactions are left out if they want to pay less taxes. Yeah. So it is a two-sword. The close involvement by the owner is a two-sworded aspect. A two-sword aspect. Evidence available from the operation of controls and completeness of records is insufficient. Yeah, small firms don't keep many of these books we are going to look at. Yeah. So completeness of records is an issue. Remember, we talked about this, why an audit does not give, why an audit gives reasonable assurance. There is an issue of completeness of records, of evidence. Now here we're talking about completeness of records. Yeah, these businesses in town, many of them have very few records, so there is a problem. For example, the manager may review the payroll, but may not sign to indicate that he has reviewed the payroll. Yeah, for him, he just looks at the total and say, "Oh, you pay the money." He doesn't sign anywhere, so he may not sign so long as for him he's looking at the figure that's supposed to be paid. Or if there are issues, he may do everything, may be investigated and handled verbally. So you cannot follow what took place. So it is difficult for the auditor to obtain evidence that a control is operating effectively. And if somebody has not signed, and yet signing is a signature of authorization, so there is a problem in a small firm. Now, segregation of duties may be inadequate, as many of these entities have a small number of staff. Yeah, you remember we talked about segregating authorization, recording, and custody of the asset. Now, in a small firm, the owner buys the goods for the shop. The owner records those items in his diary or whatever, counter book. And the owner has access to all the goods assets, all stock, has access to all the stock. The owner is the one who receipts. The owner is the one who banks the money. You can see he does very many things. So there is inadequate segregation. Yeah, of course you cannot have many people in a shop. They are not necessary in a small shop. They are not necessary. One person can manage the business, but that one it means that that limited segregation could lead to fraud or errors. Okay. Now, entity controls are likely to be rudimentary at best, but this compensated by the day involvement of supervision by the owner. Yes. Yes, the shop may have a few staff, but the owner is somewhere watching whatever everybody does. So if the owner is very active, don't say that since there are 2 people, there are 3 people in the shop with 2 people with the owner as the third, that there is limited segregation of duties. The owner's involvement can compensate, can ensure that things are done properly and are done correctly. Yeah. Now, where management is not the owner, the manager may not be as committed in running the business as the owner. So auditors should consider the adequacy of controls exercised by owners over the manager. So if you have a manager running your shop, the manager may not or has his own interests. So we need, how does the owner manage? How does the owner supervise the manager? Because the manager, you remember, in a bar, the manager can buy his drinks and sells them. And then instead of selling those bought by the owner, and he makes his own profit. So now the issue is, how does the owner supervise the manager to ensure that he does not sell his personal items, personal drinks in the shop? Because when he sells personal items, those won't be reflected in the money he gives you. And in any case, he's even using your money. So the auditor has to look at that. And also, audit evidence of the control environment may not be in documented form. Yeah, we don't have much. Those structures, when you go to a small shop, when you ask them, can you give us an organization chart, they will even say, what do you mean? What is the chart? What is it for? They don't have it and they don't need it. They know who does what. Also, ask them, can you give us your job description? The man says, what I do is in my head. Yeah. And indeed, it is all what he does is in his head, and he knows what to do. Now, small entities may develop a culture of integrity and ethical behavior through verbal communication, and attitudes and actions of management are very important in understanding the entity's environment. Yeah. Small firms don't have many people, don't have many records. They may not have a code of conduct, but many things are not written, but people know what to do. Yeah, and they do. They follow what the owner does. Yeah, so that's why the role of the owner plays a key role. Now, we are running short of time. So evidence from formal control activities may be available from main transaction cycles. So here we have sales, purchases, and payroll. So for a small firm, we have to look at key major transaction cycles, sales systems. How do they sell? How do they purchase? And how do they pay salaries? Yeah. So now, of course, we have to look at the owner or the manager has to authorize purchases. Yes. Yes. So for a small farm, the owner has to make purchases, has to sell the goods, has to pay salaries. Basically, these should be done by different departments. But here, one person may do all this. So even if we don't have detailed controls, things can be done depending on how the manager or the owner manager carries out the business. Now, so where controls are not in place, then we may not test the controls. In other words, we shall collect evidence using substantive tests. Or where controls are effective, then we can test the controls and then collect further evidence using substantive procedures. So in a nutshell, we are saying where for a small entity, some small entities have good controls. Some have a few controls. Business may not be carried out properly. So what we have to do, we have to look at how what is on the ground before we decide on how to collect evidence. These aspects will become clearer in this topic. Let me leave it at that point. The last point, it's going to be covered in more detail in this topic. So some of these things here may not be clear because we are going to look at the details in this topic. Now, what are limitations of internal control? In other words, however good a system you have, we can have problems. You remember when in the top 1, when we talked about even the top 3. However good a system is, people may steal. So what are limitations of internal control? That's why internal control provides a reason of assurance to directors that things are okay because of limitation. 1, human error. Whatever you do, however trained people are, they are likely to make errors. So we should have a system of identifying and correcting the errors. Errors of instructions, misinterpreting instructions, mistakes of judgments, or when they are tired, like somebody who is yawning in the morning. Did you sleep last night? Collusion between employees. We are talking about segregating authorization, recording and keeping assets. People can collude. Yeah, actually, if you want to steal, we talked about fraud in topic 3. Fraud, people will connive, will collude to steal. So segregation of duties may be circumvented by collusion of 2 or more people. A personal officer may collude with the chief finance officer to add ghost workers on the payroll. This is what happens. Yeah. Or, yeah, the 2, because the personnel officer keeps the records regarding staff. Now the finance officer handles the payroll. So the 2 will collude. The other one will have files of ghost workers, and then this one will input them, and then they will share. So there is the possibility of controls being bypassed or overridden by management. Yeah, management can override controls at times for the good of the company, but at times this one could be done could be fraudulent. So overriding a customer's credit limit, or credit limit, say, give him more goods on credit, he will pay. Yeah. Or let us sell him on credit, although he is not a very good customer, but I will follow up the recovery of the money. Yeah. At times that one increases sales because the owner has, the manager has overridden the control, but at times it can lead to problems. Now, the other aspect is the cost of control may outweigh the benefits. So we have controls whose benefits are more than the costs. If a control is very costly, we don't put in place. Yeah. So it's only the controls that are cost effective that are implemented. You remember from the library, you are supposed to check you, but at times they don't check your bags, and some of you steal books from the library. Now, otherwise, if you had to check every bag at the library, some of you would even break that door. So you are delaying us, we are hungry, what? So at times they just do sample checks. If they suspect you may have books, they say open your bag. Now, controls being designed to cope with routine and non-routine transactions. So the controls basically handle routine and ignore non-routine transactions. They may handle the sale of goods effectively, but not non-routine transactions like hacking the computer system. So here we are looking at, we focus on routine, like checking students coming to the exam. Now at times we ignore the non-routine, like checking the toilets, where some of you keep notes. So when you find a question, they say my handout on this for this question is in the toilet. You go to the toilet and spend that 20 minutes writing. So that's why we have to check for how many minutes have you spent outside. And some of you even say that you have a running stomach and you go out more than once. That's when we have to, that one raises a bell. So because of these 5 limitations, and however good this internal control cannot provide absolute assurance that everything is okay. That one is maybe in heaven. Yeah. So because of these inherent limitations, tests of controls alone cannot be used by the auditor to collect evidence. We don't collect evidence by testing controls. We collect evidence by carrying out substantive procedures. We may test the controls and later carry out the substantive procedures. Just a minute. Can we resume?
Yes.
Now, please don't. Yeah, students are likely to steal. That's why they check. Now, importance of control to the auditor. Basically, the auditor. Why do we look at internal control? By looking at internal control, you cannot audit unless you have looked at internal control of the client. Understanding internal control helps the auditor in identifying risks or material misstatements. You remember at top 3? Yeah, you cannot audit unless you have assessed risks. It helps in designing and performing audit procedures to detect material misstatements. As we assess internal control, we identify deficiencies. These are weaknesses to be communicated to management. By looking at the system, it helps us report whether proper books of account have been kept by the entity. Our Companies Act requires the auditor to mention this in the company's in the auditor's report. So, risk assessment, designing audit procedures, yeah, designing audit programs, yeah, audit programs, management letter, and then reporting on proper books of accounts. Yeah, those are the 4 aspects. So an important area. Now, what about if the system is computerized? Now, we are not going to spend much time here because many of these aspects were done in IT. Now, if the system is computerized, we have general controls and application controls. Yeah. Now, so general controls apply to the computer applications and ensure the continued proper operation of information systems. So general controls, that's what basically you focused on in IT. So when the client is using a computer, the auditor has to look at the computer system. And basically here we look at general control. General controls are to do with the computer and the environment. Application controls, those are specific to particular applications. If you are doing sales, how you sell depends on procedures for selling in the system. And yet the general controls, those are to do with the computer and the environment. Now, so regarding the computer, please minimize comments. Development of computer applications. So what control should the auditor look at? Yeah. Do we have standards over systems design, programming, and documentation? Yeah. Do they test procedures, full testing of procedures, especially a new system using a test that? Do they test a new system before it is used? Is the new system approved by computer users and management? These things we did in IT. Is there segregation of system design and operation? Installation procedures to ensure data is not lost or corrupted during the transition, and the training staff on using the new system and documenting. So these things you did in IT. Prevention or detection of unauthorized changes. Yeah. Segregation of duties, approval of changes by computer users and management, full record of program changes, or whatever changes you have made, the system keeps a record of that. Password protection of programs so that access is limited to computer staff, or restricted access to central processor. Maintenance of program logs. The program log will give all what you have done, the time, what you may have deleted, backup of copies. Sorry. Now, so access security to programs and data. Yeah, these things you did. Internet firewalls. Do we have adequate firewalls to check hacking, data encryption, and use of keys? Yeah. Restricted access to authorized users only. Password controls offsite. Protection of hardware against fire and other hazards. Power backup sources. Disaster recovery procedures. And maintenance service agreements and insurance. So these ones you did in IT. So basically revision. What is this one saying? You are too speedy. You are too speedy. I'm actually very slow. These controls were done in IT. Application controls are procedures used to initiate, record, and process and report specific transactions. So application as specific control as specific. These ensure that all transactions are processed accurately. Yeah. So here we have the auditor has controls regarding completeness. Yeah. How do we the system? How the auditor has to check whether the system processes all the inputs completely. Yeah. Which also you must have done in IT. Control totals. Yeah. You remember missing marks in moves. Missing marks in moves is because of lack of control totals. Because you know people have done the exam. Now, when you input marks, before you submit the marks, you must check whether you have the people, whether you have input all the marks or the people who did the exam, because there is an attendance sheet where you sign. That one has the number of people. Therefore, that's a control total. Yes. You either have 400, if you have 398, then it means marks for five students are missing. Yeah. So a control total ensures completeness. That's as simple as that. So people who miss marks, I think should be investigated. Document counts. The system as let's say prints invoices, the documents are counted so that if there are five transactions, there should be 5 invoices. We shall be looking at this later. A one-to-one check. If there are 5 delivery notes, if there are 5 delivery notes, there should be 5 sales invoices, one-to-one. The program checks. Please, can you keep quiet? Please. The girl with the hoarse voice, can you keep quiet? Now, a one-to-one check is where the program checks 2 sets of documents like delivery notes and invoices. Yeah. So that for every delivery note, there is an invoice. So it checks completeness of invoicing. Programmed matching of input to expected input control file. Procedures over resubmission of rejected controls. And, I'm not going to explain each and every item. Programs, controls to ensure accuracy of inputs. Yeah, programs to check data fields. Now, data fields, if you're filling, if you have, there are certain fields you are supposed to fill. So you cannot close, complete the transaction unless all the data fields have been, and all the fields have been completed. This ensures all the information required is captured. Digital verification, reference numbers, because these transactions are given reference numbers. Now, if reasonableness test, now the system checks. There should be controls to check whether the transactions are reasonable. For example, you cannot withdraw more money than what you have, because the system checks if the withdrawal is more than the available balance, then that is a reasonable withdrawal. And that is a withdrawal which is not reasonable and will be checked automatically. It will be rejected. The system will reject the withdrawal. Existence checks. you cannot withdraw money unless you have an account. That's why existence check. If you are selling, in order to sell, to post an invoice, there must be a customer. Other you cannot sell, you cannot process an invoice unless there is a customer's account. So if the customer, if this is an order for a sale to a new customer, the system requires that you first open the customer's account where you're going to debit that invoice. Character checks, and so that no unexpected characters are used in reference. These are things you have done in IT. Necessary information, yeah, all necessary information has to be we shall be looking at that in sales. Permitted range, anything above the range is not allowed. For example, if overtime is restricted to 6 hours, now okay, 4 hours. Now your overtime claim of 8 hours will be thrown out because it is above the range. Now, agreement of control totals, that one we've talked about. Control totals ensure that when we are in, for example, what we do when we are capturing your marks, we just do document count. As I input, I check. After I've input 20 scripts, I have to check that I have 20 entries. Yeah. So that when I have input the 400, I must have my figure for the document count should be 400. And that one to ensure that everything is input and input accurately. Controls to ensure authorization of inputs. Yeah, manual checks to ensure inputs are authorized and by the right person. Those are IT internal controls I've talked about. Controls over processing, batch reconciliation, screen warning before logging out. You did. Controls over mass file and data scanning data. Now, a one-to-one check. What is the scanning data? What is a master file? For example, what is a master file? I suppose you have made these terms in IT. Now, a payroll has standing data. That is information on workers names, scale, allowances, etc. That is standing data, and that's a master file. Now, there should be controls on the master files and the standing data. So, for example, regarding the payroll, there should be, we have to check that all the people on the payroll on the master file are our workers. Where these people work, one-to-one. Nobody should be on the payroll unless he's a worker. There should be review of the master file, so to ensure that people have not smuggled in ghost workers, or people have not changed their salary scales. So we have to do record counts. If there were 200 workers last in June, then we should have 200 workers on the master file. Otherwise, if the file has been corrupted, you may pay less workers in July. And then we have to ensure that there are controls over deletion of accounts, so that all workers are paid. Now, deletion here, it could be deleting, for example, a sales ledger, a data's ledger is a master file. Now, people could delete accounts of datas with debit balances, yeah, fraudulently. So there must be controls to ensure that these accounts are not deleted if they have debit balances, because this money is supposed to be paid. So basically, these some of the controls in a computerized environment. Have about 15 minutes. So unless there is a question, we are moving on. Is this one asking or what? What is this? Members, are we still on topic 3 or you continue sleeping, please? Okay. Now, somebody who is asking where we are, recording internal control. We have to record internal control. Auditors are supposed to record internal control. And what do we record? We record the internal control following transactions cycles. Like we record sales. The cycles are basically in a big entity. Sales, purchases, inventory, these are the transaction cycles or systems. Bank and cash, payroll, revenue and capital expenditure. So there's 1, 2, 3, 4, 5, there are 6. There are 6. But in a small firm, basically we have sales, we have purchases or expenditure, and then we have payroll. Now expenditure includes revenue and cash. So basically for a small firm, we have 3. Purchases, sales, and then payroll. Yeah, but payroll could also be under under expenditure. So just only only 2. Now, of course, when we record the system, the record is kept on the permanent file and it's updated every year. And we use one or a combination of the following methods. So what method does the auditor use? These are the methods we have used in other subjects. I think you did them in IT or in research methods. Yeah, research methods. So we are not going to spend much time. What are these comments about? I'm going to give you the notes. I'm going to give you the notes, please, on MobSafe. So now, what is this? Okay. Okay, now, 1, we use one or a combination. Notes, a written description of controls in the system together with criticisms of the system. So we write notes about the system. So we write notes on sales, notes on purchases. For example, if it is purchases, who authorizes purchases and how our purchases are carried out. Yeah. So who authorizes? How it's done? Which documents are used? Yes. So you just write notes. It will be clear when we have looked at the systems. Now we cannot bring in very many details. So just write notes. So when you write notes, or what are the advantages? Since you are experts at writing notes, so let me not explain beyond this. What are the advantages? They are relatively simple. Anybody can write notes and can facilitate understanding by all team members. Yeah. Notes can be used for any system due to its flexibility. Yes, any system. But notes can become time consuming if internal for a big entity. And notes can be difficult to identify missing controls. For example, when you look at a page when you look at for a big entity, you need very many pages. Yeah. So it can be time consuming. Secondly, when you look at several pages, you cannot identify the message controls. Yeah. You have to read through. It's like looking through verses of the Bible when you don't know which verse has what you want. So it's difficult to identify the missing controls. Yeah. That's why notes are appropriate for small entities, because the notes will be limited. Yeah. But you cannot use notes when you are recording the system of MTN. No, you have to use another method. A small farm like a shop, a salon, you can use notes because there isn't much to write anyway. Few documents, few procedures, so that you can write notes. Okay. Or notes can be used with other methods. The other method, second method, is a flow chart. Now, flow charts are a diagrammatic illustration of the physical flow of information through the accounting system. Here we use flow lines. I think you have done flow charts now, and symbols. So a flow chart, we have an example here of a flow chart. You can see we have this is a flow chart on sales. We have the customer. Can we briefly look at what we are flow charting here? These are the flow lines showing the flow, and these are the documents showing documents and procedures. So, customer purchase order. This is a customer's order. Yeah, or it's the customer's order makes an order. Now the order is received by sales. Yeah. And sales makes sales orders. Now, the documents we are talking about may not, in some entities in town, some of them, when I've never seen a sales order, I have a number of them in my here. So, and big shops orders are recorded by the sales department. So this document is for sales order. Now, if the sales are for credit, if the goods are the sales and credit, then there is credit check. Should we? Yeah. This one is this one. These two are for documents. This one is a credit check. You girls. Now, credit check. People with the host. Now, credit approval. If there is credit approval, and credit approval is separate from sales, you can see, we shall talk more about this. Then the sales order together with the customer, with the sales order raised, and then the customer is given a feedback that the order has been authorized, and then if goods may require production, so you can see this line is production planning. Or if the goods are available, then set aside goods as per order, and then the order is used to pick goods, and then when the goods are picked, the goods are used to, there is in the store marked copies are sales order, Just a minute. Now here we have dispatch of goods and invoicing. Dispatch goods with 2 copies of delivery note. So there is delivery is by store. Yeah. Delivery is by store. And then an invoice is prepared based on the delivery note. Because the invoice has to be delivered with the goods, and then the invoice is sent to the customer, and then a copy of the invoice is filed, posted to the ledger, and then the goods are sent to the customer. So in a nutshell, of course, a copy of the delivery note is kept in the store. So it shows what the control, the procedures of sales transactions. You can see various people involved. Of course, we have the flow chart shows the parties, the customer, sales, credit, stores, and invoicing section. And of course, even when we are writing notes, this is how we do it. You write notes on what happens at each procedures at each stage, and then link. Yes. Now, this one may not be very clear because we have to understand how the sales cycle works. So I think we are doing this one next week. Now, what are the advantages of a flow chart? One can view the entire system presented in one diagram. You can have the whole cycle, the whole sales. So here we shall have a flow chart on sales, another flow chart on purchases, another flow chart on payroll. So in this case, you can have the whole system on one page showing the flow chart for sales. Missing control may be easily identified using the standard symbol. Now you can see here, there is invoicing before dispatch. There is a problem that goods can be invoiced when they are not delivered. Yeah. So there is already a problem within here, but some systems operate like this. But normally it is dispatched before invoicing. Yeah. Now this one should come before invoicing. But this system is also in some entities. So it can be very clear that from this diagram, you can see that an order comes, there is no credit check, meaning that an entity is selling goods to whoever comes. Yeah. So if this diamond is not there. So it's very clear from here if there is a missing control. The disadvantages are they are difficult to change as major amendments may require redrawing the flow chart. Yeah, if you are to amend this, you may have to redraw the whole flow chart. Are most suitable for describing standard systems as procedures for dealing with unusual transactions are normally recorded using notes. You see here, unusual procedures cannot be flow charted. And that's why in some systems, this flow chart has a column of notes explaining the unusual procedures. Yeah. So the flow chart alone is accompanied by notes, summarized notes, because of problem number 2. Now, the third method is what you have done, questionnaires in your research methods. So I don't think questionnaires, here we have two types of questionnaires. So you know, questionnaires are a list of questions. Now in audit, we have 2 types of questionnaires. Internal control questionnaires, which are a list of questions designed to assess whether desirable controls exist in each transaction cycle. As usual, the questionnaire is a list of questions IC2 for this is an example of sales. So we shall have one for purchases, another one for payroll. Should be able to design these questionnaires after I've gone through by the end of this topic. After I've looked at the controls, you can see here. This is a working paper for this particular audit. But of course, this questionnaire could be used, it's basically used during the first audit. It could be amended. It may not be. Document recording the system is mainly done during the first audit. Then the subsequent audits, we review our records, see whether the system has changed or not. So, objective and questions. Recorded, what is the objective? Recorded sales are for goods delivered by the entity of the existing customers who are great with. So how do I achieve this objective? These are the controls we have to, these are the questions we have to answer. Is there segregation of duties between processing orders, approving credit, recording sales, and receiving cash? Yes or no? And then not applicable. And then we have to put comments about explaining, talking about the answer given. So this objective is achieved if there is segregation of duties. We are going to see more about this. Are sales orders prepared by sales staff? Or, yeah, yes. Sales orders approved by responsible official after checking customers' creditworthiness and credit limits? Yes. Because if there is no check, then it means this is a weakness. And who does it? Yeah, you see. A goods dispatch using goods dispatch not supported by approved orders, and goods dispatch notes authorized after checking goods. This one will be clear when we look at the controls. Now, so we shall go through these. We shall go through these, yeah. So these controls, we are going to look at all these controls in the transaction cycles. So this is just simply an example. So since you have all of us with questionnaires, then we have an internal control evaluation questionnaire. Now, the IC2, it's already 10 o'clock. Let me wind up so you prepare for the next lecture. The IC2 looks at whether identifies controls in place or not, and they require direct questions. The internal control evaluation questionnaire is a list of questions designed to assess whether specified areas of fraud can occur. Yeah. So the evaluation questionnaire brings out the weaknesses if they are there. Yeah. Or brings out whether the control works, whether the control works effectively. Yes. So, and this questionnaire, many audit firms actually use the ICE2 because it records the and also evaluates. So, the ICE2 has two parts: key questions and subsidiary questions. So, key questions are the major questions. One, for example, in purchases, one of the important control is goods purchases should be authorized. Purchases should be bought from authorized suppliers. Yeah. So the question is, can goods be received? There's a mistake. Received from unauthorized supplier. Can goods be received from unauthorized suppliers? So this question is phrased in such a way that it brings out a weakness or a strength. Yeah. So it means if the answer is yes, now the answer to this one major question comes from the answers to the small questions. So these are the minor questions. Now the answers to the minor questions will give us the answer to the main question. So you cannot answer the first question unless you have answered the small questions. So can goods be received from unauthorized suppliers? Meaning that goods should be bought from authorized suppliers. So how what control should be in place to ensure that this one does not happen? Is segregation of duties satisfactory? Yeah, we are going to see controls in purchases. Are controls of a relevant master file satisfactory? Is there a record that all goods received have been checked for? Of course, goods when you are buying, we place purchase orders, and purchase orders have to identify the goods have to be received. Place the purchase orders are received by suppliers. Then goods are received. When the goods are received, we have to check. We cannot receive the goods unless we have an order. If there is no order, then it means we are receiving illegal goods. You cannot receive goods if there is no purchase order. Yeah. And now, so and the purchase order specifies the number, the weight, the quality it is, and the goods have to be checked. Regarding, we have to count, we have to check the quantity, and then we have to prepare a goods received note. Yeah. So, and to prepare a goods received note, the goods received note is based on goods delivered with a delivery note. So the answers to these small questions, we don't have much time. There are very many here. I know we cannot follow them unless we have gone through the purchases cycle. Don't worry, we shall come back to this. And then the answers to these, some are yes or no. Now we have to give weights. What answer? Of course, some of the answers here are yes or no. What answer do we give to this question, to the main question? So we are going to have key questions for each cycle, and then small questions for the other controls. So this one brings out weaknesses. It's basically that's what is used by many audit firms now. Advantages. I want to finish with this and go away. Advantages of questionnaires. I think you can read through. Yeah. I think let me stop here. I will start with 4.3.